Alright, guys, so something big is happening. Despite Donald Trump threatening a global trade war, the US dollar isn't going up. In fact, the direct opposite is happening. The strength of the dollar is actually crashing down, which should come as a shock to many. Even Wall Street is bearish over the fate of the dollar. Deutsche Bank sees a serious risk of the US dollar losing safe haven status. The world is moving towards a new geopolitical order. And this is the most fatalistic headline that I've ever seen. The speed and scale of global shifts is so rapid that it is a real possibility. And we have to acknowledge reality here. Losing safe haven status is going to be a big blow for the US economy. Now, the old playbook was simple. Whenever there's a crisis, the default move is for money to flow into the dollar. Now, whether that is a hot war, a financial collapse, or a banking crisis, investors would sell their own local currencies. They would then take the money and buy dollars as a safe haven. But that isn't happening today. Since Trump got into office, the US dollar has been on a downward spiral. We have crashed back to the lowest level since November. In other words, the dollar has lost value against global currencies. This isn't good for the US economy that needs a stronger dollar, especially during this period of rebuilding. A weaker dollar means all your import costs heads up, and as we all know, the US doesn't produce much domestically. The majority of products people buy are stuff imported from overseas, from countries including Canada, Mexico, and China. The US has a massive trade deficit with the world. They import more than they export. Just with China alone, the amount of dependence has reached nearly $300 billion in 2024. For Mexico and Vietnam combined, the deficit is another $300 billion. And until the US builds back their industrial base, they need a stronger dollar to offset their import costs. A weaker dollar compounds the inflation problem people are already facing in the US. For over 2 years, the Federal Reserve has told everyone that inflation is under control. Now, Powell has gone on the record telling us that prices are under control, not to worry. Higher rates would eventually bring inflation down to 2%. But it's a lie, it's simply not happening. Since August last year, inflation has been either stagnant or has been outright rebounding. Now, whether it's the headline figures or core inflation that strips away food and energy, prices are still heading up. Even within the United States itself, the US dollar is buying less and less at the grocery store. And when we take a step back and zoom out, Trump's policies could actually threaten to tank the dollar even further. Now, when Trump embarked on this tariff war, the consensus was for the US dollar to hit higher, much higher. And it kind of makes sense. When you slap tariffs on a country's goods, their exports to the US would start to drop or outright collapse. Exporters would have less business and their revenue would drop. Take Trump's reciprocal tariffs for example, and let's focus on South Korea. US tariffs on Korean goods is less than 2% today, while Korean tariffs on US goods is nearly 14%. Now, if Trump goes ahead with his reciprocal punishments, the US market would raise their tariff rate to match Korea's. Importers in the US would have to pay much more for Korean goods now. There's a very good chance people would simply cut back and stop buying all these products. They simply can't afford them. And this would slow the flow of US dollars to Korea. And now you extrapolate this to the global economy. The supply of dollars would drop significantly. A lower supply would drive the dollar higher. However, the markets are afraid of something worse than a dollar shortage. They are afraid of the entire US economy collapsing as a consequence of the trade war and all of Trump's bizarre policies. Now, over the last week, we have had disturbing news from the US Federal Reserve. The Atlanta Fed is forecasting a negative 2.4% growth in Q1 for the US economy. Now, this seems like an extreme drop from Q4's GDP growth that was positive 2.3%. But if we understand the state of Trump's policies, it makes total sense. It's because the world believes Donald Trump is pushing the US into recession. Now, Scott Bessent, the US Treasury head, has confirmed on live TV that US consumption will be coming down.
Top 10% of Americans are 40 or 50% of consumption, and that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down, and could we be seeing this economy that we inherited starting to roll a bit, sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period.
Besson made three incredibly important points. Now, firstly, he wants to get interest rates in the US to collapse down. Secondly, public spending is going to drop, which means the US government might not run the deficits to the moon. In fact, with Doge cutting jobs, this could come falling down. And lastly, there is going to be a detox period. Now, if this isn't a clear warning of a US recession, I have no idea what is. We are witnessing a dramatic narrative shift from the Trump regime. We have gone from the golden age of America to no pain, no gain. Trump himself has admitted that things could get really nasty. Besson has also confirmed there won't be a Trump put. The Treasury won't come in to save the stock market if there's a collapse. And we all know what has been driving US asset prices for the last 3 years. It has been the massive amount of spending from the government. And when you run deficits hot at 6.7% of GDP, it's a rising tide that lifts all boats. And the biggest recipient of this is the US stock market. We had trillions poured into the S&P, and that drove the index well above 6,000 points. But now this is reversing. US stocks have crashed by over 5% in just a few weeks. And with Trump focusing on cutting down the deficits, this is very bad news for investors. People are worried about the biggest driver of both the US economy and the stock market. And as US stocks continue to drop, this removes an incentive for people around the world to hold dollars. So investment demand for US dollars is coming down. And the more aggressive this fall gets, the greater the dollar could crash as well. And this is where we must talk about the tariff war, because it could escalate the exodus of money out of the USD.
President Trump's been saying tariff is his favorite word. I think reciprocal may be his second favorite word. And we're going to put this at the feet of our trading partners on April 2nd, talk about who's a good actor, who's a bad actor, to what degree they have put up barriers against us. And it'll be a choice. Either they can drop all the market manipulation and things like that they've done that have hurt American workers. And if they do that, then we could have more frictionless trade, or we'll put up the tariff wall, we'll collect a lot of money, and we will make the system fair.
And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. On April 2nd, the United States could be moving to punish the entire world. Global economies could be hit with a 10, 20, or even 30% tariff on their exports to the US. Normally in such a crisis, the dollar would be rising, but yet it is falling. And a big part of that are US importers themselves scrambling to buy a ton of foreign imports before the deadline. The value of US imports have soared by 10% in January alone. Importers are front-loading their demand for foreign goods like never before. This is especially so for goods from Mexico, Canada, and China. The US trade deficit has hit an incredible $130 billion in a single month. When importers buy more US goods, they also flood the global economy with more paper dollars. They crank up the supply of currency, sending the dollar strength lower. And as Trump continues his threats on the world, importers would only scale up their buying in February and in March, and this puts even more downwards pressure on the dollar. So the dollar crash might not be over yet. Trump's overall trade war is highly inflationary to the US, and that could be enough to tank domestic consumers and send the biggest driver of US GDP into the gutter. Now, just in businesses alone, Trump's trade war is pushing the economy into the extremes. Trade uncertainty is now at the highest level in modern US history. It's even higher than the level seen during the pandemic lockdowns in 2020. That's how serious the situation really is. Where companies are fearful, they won't be confident enough to deploy money. They would invest less and they would hire less. And both of these would collapse real economic investments and consumption. And that makes the US less attractive to invest in. Plus, the trade war is making many countries angry about trade with the US. And this could easily escalate to large scale boycotts and counter tariffs from the world economy. Many trading partners, including Canada, they are very furious with the US, and many of them are hitting back hard on the US economy. We aren't just talking about the usual tariffs on US goods, but also energy heading into the United States. Those are going to get punished as well.
And I'm going to put a 25% tariff on the electricity, the 1.5 million homes and businesses as of Monday until President Trump drops these tariffs. That's the last thing I want to do. It's the last thing. But he has to understand that he can't attack our country economically and expect us to roll over.
So 25% tariff starts Monday.
Starts Monday.
Unless this war ends before then.
That's right. Yes.
Which means American electric bills in the upper Midwest and the Northeast, the Mid-Atlantic are going up.
That's right. And what we're seeing already with gas prices in the Northeast, gas prices are going to go up. People eventually, the assembly lines, if he continues April 2nd, will shut down within 5 days. Auto parts go back and forth across the border up to 8 times before it gets assembled in Ontario or Michigan or other states. And for what? He's created an absolute mess, and we need to clean it up and stop it immediately and move forward.
The US economy is facing big headwinds within and without. There are so many risks that are piling up because of Trump's trade war. Even if he manages to bring down the US deficit, the economy could very well fall into recession. And investors around the world, they are very pragmatic. The US is no longer exceptional. You can find growth and innovation in many other countries, including China. So the flight of money out of US assets is a big reason for the collapse in US dollar strength. If we look eastwards, we can get an idea where global capital is flowing. And if it isn't flowing into the US, this removes demand for dollars. The divergence between US and China technology stocks is a very good example. As the Magnificent Seven collapsed by over 10%, Chinese megacap in tech rose by over 40% in the same period. They added over $430 billion of investment money. In other words, many investors sold their US tech assets to buy Chinese stocks. This is yet another example of why the dollar is under attack. As China continues their progress in AI, chips, and technology, it could sap away even more money from the US. And this gets even more urgent with China moving to boost domestic consumption. And the deck is getting really stacked against US economic growth and the dollar. During China's National People's Congress, the government pledged even more stimulus. More money is coming to guard the economy from changes unseen in a century. In reality, the US eventually would need a weaker dollar as well. If Trump wants to ramp up exports, he will have to devalue the currency. But the sequence of events have gone haywire. The weaker dollar we see today is not some deliberate move by the US or the signing of some Plaza Accord 2.0. It's just the world realizing that the US economy is on the brink of a recession, and Trump is just making things worse. But let me know what you think. Will the dollar continue to fall? And are we headed towards a US recession in 2025? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.